Have you ever wondered why prices keep going up, but your paycheck seems to stay the same? Or why the wealthy seem to get wealthier no matter what the economy is doing today? Today, we're breaking down how inflation and money printing work and why owning assets, not liabilities, is your ticket out of the financial trap. I'm Paul Perez, a real estate developer, HUD certified counselor, commercial real estate agent, and a certified licensed loan officer. I'm your guide here on the Better Living Interest channel. If you're ready to level up financially, hit that like button and let's get into it. Let's start with the basics. The government prints money. In the US, that's the Federal Reserve. Whether there's a crisis like COVID, a recession, or a war, the government pumps money into the system. This could be in the form of stimulus checks, business bailouts, or buying bonds. They do this to stimulate the economy, but it comes at a cost. More money in circulation equals less value per dollar. It's like watering down orange juice. You get more liquid, but less flavor. That's what happens to your purchasing power. And that leads us into inflation. When too much money chases too few goods, prices rise. Example, eggs cost more, rent skyrockets, gas starts to eat your budget. That's inflation in real time. But here's the catch. If your income isn't rising faster than inflation, then you're losing money without even realizing it. Your dollars are silently shrinking. You might still have $1,000 in your bank account, but what it can now buy is now worth $900. That's an economic erosion, and most people don't even notice it. Keep in mind, inflation averages about 3% per year. So within 10 years, your $10,000 or $100,000 that you have been able to save will now be worth 70% of that value. Now, here's where things get interesting and unfair. While your cash loses value, assets gain value. Stocks, real estate, crypto, gold, and even art. These assets don't just hold value. They often rise in price because of inflation. Let's take real estate, for example. If inflation is 6% and your property value goes up by 10%, you just gain 4% in real terms. That's how people use inflation to their advantage. Same with stocks and Bitcoin. They often adjust with the economy and continue to grow long term, even when the dollar weakens. People who own assets aren't just surviving, they're thriving. Why? Because their wealth is tied to things that grow over time. If you own a home, you're gaining equity. If you hold dividend paying stocks, you're stacking passive income. If you bought coin at $3,000 and held it, well, you already know. The key is they're not working harder. They're just positioned smarter. Now let's flip the script. If you don't own assets, you rent, not own, you save in cash, not investing, you live paycheck to paycheck, inflation is going to hit you the hardest. Your rent's going to continue to rise, your groceries are going to continue to cost more, your car loans are going to continue to become heavier, and your money is evaporating faster than you can even earn it. You're basically stuck in a financial treadmill, running hard, but going nowhere. You've heard it before. The rich get richer. Here's why. They use inflation to their advantage. They borrow money at low rates to buy appreciating assets. They invest in businesses, properties, tech, stocks, and bonds, cryptocurrency, specifically Bitcoin, not liabilities. Meanwhile, the poor and even the middle class are often encouraged to take on liabilities. New car, new credit card, new single family large house, buy now, pay later, extravagant vacation. expensive new fancy clothes. These aren't wealth building moves. They're wealth draining traps. But here's the good news. Listen, I'm not saying this to depress you. I'm saying it to wake you up. You don't have to be born rich to get ahead. You just need knowledge, a plan, and a right asset. Start small. Buy fractional shares of stock. Invest in real estate. Purchase a multifamily house instead of a single family where you can have the tenants paying you rent, contributing to your mortgage that can help you build equity. Or even buy real estate with a partner. Buy a REIT, real estate investment trust. You can purchase into those as well. Start stacking crypto with $10 a week. That's less than what you pay for in lunch. You don't need to own the whole pie. You just need to get a slice. That slice grows over time. If you learned something valuable today, do me a favor. Like this video, subscribe to the channel, share this with someone who needs to stop saving and start building. And remember, inflation may be silent, but you don't have to be. Own assets, build wealth, live better. This is Paul Perez with the Better Living Interests channel, signing off. Until next time, peace.